Priscilla Barrera with the Investing News Network, and here with me today is Frank Holmes of US Global Investors. Thank you so much for joining us today, Frank.
It's great to be with you.
That's great. So my first question for you is about gold prices. So gold prices increased almost 13% last year, and they started this year above the 1,300 per ounce mark, right? So do you expect gold prices to perform well in 2018?
What's really amazing about mainstream media is so negative gold. And gold since the beginning of 2000 has outperformed the S&P 2 to 1. Much better. When we're talking about the stock market, bullion's been better. And last year, it's up 13% and still negative. I think that it's just a great buy. The DNA of volatility of gold is plus or minus 20%. It was up 13%. So this year, I forecast last year gold would go to 1,300. I think it could easily go to 1,500 this year. I think CPI, inflation indicators, are being reassessed, and that inflation is actually a lot higher, because if you looked at the 1990 model for determining CPI, we have 8% inflation, not to 2.1. So I think that that's another reason that's bullish for gold. And we also have a global strong economy. PMIs, Purchasing Manufacturers Index, is very robust. That's great for the love trade. And that's Asia and China and India that predominantly buy gold for love.
Right. And one of the big debates here at VRIC is the gold versus cryptocurrencies debate. What would you suggest resource investors looking into cryptocurrencies?
I think it's a misguided argument. Bitcoin early adopters were gold bugs, and they never sold their gold to buy it. They diversified into it. And all the research I've done and going around and talking to people that were the original investors were like 70 years old. And they liked the fact that Bitcoin was decentralized. They liked the fact that it was capped at 21 million coins would be issued. And so as you have more and more buyers coming in all the time through Coinbase, etc., and it's non-margin, then guess what? It's going to grow exponentially. So I don't think it's really hurting gold. I think what's really important is these ICOs, initial coin offerings. They're hurting junior mining because the millennials, which in numbers are bigger than baby boomers, they don't have the wealth, but they would turn around they have Tinder for hot dates. They want to quickly have a date. And by the way, I want to buy this ICO, this new currency. They can open an account in 5 minutes to do a trade, not wait days for a brokerage account. So there's too many regulations in opening an account, and they can streamline that brokerage business and streamline the cost of doing financings. Then I think you would have more money going and speculating in junior mining. The speculators have gone to the ICOs.
So let's say a resource investor were to look into cryptocurrencies. How much percentage would you suggest them to allocate in their portfolios, maybe compared to precious metals?
Well, I think 1 or 2%, because it's emergent and speculation. Remember, this is not investing. This is speculating, because the DNA of volatility of Bitcoin in a month is plus or minus 50%. It can double and fall 50%, so that's a unique animal. And so I think that what's really important is, that's why I invest in a company called Hive Blockchain, and for that reason is that we mine virgin coins. And they're not going to allow an ETF to come out because a hacker may have got paid with Bitcoin and he sells it into an ETF. So that's why there's no Bitcoin ETFs. And so we don't have to worry about that as Hive Blockchain. We're mining virgin coins in Iceland, and we're expanding into Sweden. So it's a very exciting, that plan. But it's really not, it's ignited Canadian capital markets. Besides marijuana as a formation of capital, the ecosystem in Canada for speculative money. So now we have blockchain technology. And blockchain is going to revolutionize all payment systems. Stock trading 24/7, costs will drop by 90%. So I think that if you look at it, Bitcoin is what email was to the internet. Bitcoin is waking the world up to blockchain technology.
Right, and going back to gold, what factors should investors keep an eye on this year that could impact gold price and the gold market?
Well, I think this calculation of CPI number, it's going to change. We're going to get bigger inflation. The drop of corporate taxes, what did Walmart do? The biggest consumer company in the world. It immediately turned around and paid all of its employees and increased the minimum wage dramatically. So they're now spending more. So we're going to get a stronger inflationary cycle. And the global economy is also in an uptick. President Trump is very much anti-regulations, or streamline those regulations, and it's showing up in the capital markets of confidence.
All right, and you're also going to be part of streaming royalties presentation later today at VRIC. Why why should resource investors look into these type of companies in 2018?
You know what I found was that a lot of money will not go into our active funds. I can go and outperform the ETF, the GDXJ, and still money's all going into this index that it became a serious problem last year, that it captured 95% of all the fund flows. Now all of a sudden they own more than 20% of companies, and they blew out in June $3 billion, and it really hurt junior mining and mid-cap mining. It hurt the whole industry. So I came out with a smart beta, and a smart beta ETF called Go Gold, Go AU, and New York Stock Exchange, and in Canada, Go as a ticker. And it's a smart beta in 30% of royalty companies. Now, by having 30% of royalty companies, what we showed is that it outperforms the GDXJ 92% of the time in rolling 12-month periods. So I think that royalty companies are a real key part of any portfolio, because that smart beta ETF will far outperform the GDX and GDXJ, which has billions of dollars in assets in it.
All right, and what is your best piece of advice for resource investors this year?
The tacit knowledge. Get with young people like you and find out what they're spending their money on in technology, and what apps you're using to pay for bills. And what is, I learned this whole thing of blockchain from my godson and my sons. Dad, you've got to turn around and find out what's happening. And that was really, truly beneficial for me to stay young at mine. And Frank Justra, in launching this high blockchain, the same thing. It's just young guns that were very invigorated. So when you go to these conferences, bring your children, make sure you're listening to them and learning.
Right, and finally, Frank, would you be able to share with the audience what are your favorite stock picks or what companies you like right now?
You know, one of the things I think is really bullish on is copper. I think copper can go to $5 a pound. I think copper, little juniors like Copper Bank as a micro cap with huge optionality for copper. I think I like Copper Mountain is another one that's a producer. I think these stocks have huge upside potential. And why? Because the electrification of the world, Tesla cars, blockchain, all this stuff is copper, copper, copper. And there's going to be strikes in Chile this year. Any supply disruption, the world's got strong purchasing manufacturing index numbers. The world is growing at a nice pace. The copper demand is much greater than the supply. No major new discoveries, nothing coming on stream. Guess what? The upside for copper is a positive surprise.
All right, thank you so much for joining us today.
Thank you.
Once again, I'm Priscilla Barrera with the Investing News Network.